TurboTax doesn't catch this mistake, which could cause you to pay tax twice. This is the surprise that catches a lot of people off guard. Huge, large tax bill that you are on the hook for. This is why. It's because, fortunately, it might not be too late for you to actually reduce your tax bill. I'm going to start by assuming that you've entered in all of your personal information, so let's go ahead and start with the exercise of your NSOs by clicking Personal and then going to Personal Income. Select I'll choose what I work on, and then we're going to go down to where it says Wages and Salaries and W-2. We're going to go ahead and click Update. So we're just going to assume that this person has already entered in their W-2, which for the most part should be accurate, but let's go ahead and click Review and just double check a few numbers here. This is employer information. I'm just going to skip that for the sake of this example. Let's go ahead and look at box 1. Now, when you exercise non-qualified stock options, the spread between the exercise price, what you paid for it to purchase the shares, and the fair market value on the day that you exercised, that is going to be reported in box 1. And this is going to be in addition to salaries or any other type of income that you had, like RSUs vesting or ISO disqualifying disposition and other types of compensation. We may consider double checking these numbers here. So for example, in box 1, if you are earning $100,000 worth of income and there is an extra $250,000 of income, that $250,000 should correlate to something else. In this example, the spread between the exercise price and that fair market value on the date of exercise. So if that compensation element isn't reported here, then you aren't paying enough taxes, or potentially you're paying more than enough taxes and you're over reporting on this page. Now in box 2, it talks about federal withholdings. Hopefully your company withheld when you exercised some of those taxes so that you're not on the hook now for a huge lump sum of taxes that are due. Typically your employer will only withhold at one of two rates, and that's going to be the 22% income tax rate or the 37% tax rate. And that most of the time isn't going to align with what your tax rate actually is. So you may be over withholding or under withholding depending on where your income actually falls. This is the only place where your exercise is actually going to be reported, is on your W-2 form. When you sell is when other tax forms come into play, and we'll go ahead and address that now. You may be a little disappointed in the amount of taxes that you owe this year, but the good news is that it might not be too late for you to actually lower your tax bill. But CPAs and TurboTax tell you how much you owe, but the goal is actually to owe less. That's why I created my firm TechWealth, to specialize in owners of equity compensation to minimize taxes and optimize your equity. So to report the sale of the NSO, let's go ahead and click on Personal Income, select I'll choose what I work on, and let's scroll down to Investment Income where it says Stocks. Go ahead and hit Subscribe. Now, we're going to know that we're in the right place because of what it says here. It says this section covers these forms and files. And the very first one is 1099-B, which is where the disposition of those assets is going to be reported. And then also we're going to know we're in the right place because these are also equity compensation forms, the 3921 for ISOs and 3922 for ESPPs. And then 8949 and Schedule D are both going to be applicable in this situation because, again, we are disposing of assets or selling assets, hopefully for a gain, in which case these will be reported on those documents. So let's go ahead and scroll down and click yes. And you'll note that we've got stocks selected here. This isn't cryptocurrency or any other type of asset. We'll go ahead and click continue. And then it's going to ask us for our brokerage account information, and it could be Carta or Fidelity or Schwab or Morgan Stanley. But let's go ahead, for the sake of this example, I'm going to go ahead and click skip import. You're more than welcome to go ahead and select to have them pull the information directly from your 1099-B or directly from the brokerage account. Now this is where you'll enter it in manually, but again, for the sake of this example, I'm just going to keep things pretty high level. I'm just going to say that E-Trade is holding this because that happens to be where Tesla and SpaceX hold their equity. It's going to ask us a few questions. Do these sales include any employee stock? And then you'll see right there NQSOs, non-qualified stock options, or NSOs, and the answer is yes. We'll hit yes, and then it asks, do you have any more than 3 sales on your 1099-B? We'll keep things simple and select no. We'll just pretend that we've got 1, hit continue, and then we'll enter them in one by one, and then it's got the instructions on how to enter this information in. But on this next page, it's going to bring up a couple important things. Now on this page, we'll just want to make sure that we've got non-qualified stock options selected. We've got the right type of equity that we're dealing with, but the biggest thing that I want you to take note of is that it keeps talking about cost basis here, and cost basis being incorrect. Now this is where double taxation happens. When you exercise your non-qualified stock options, you pay tax on that spread at exercise. So you're paying tax on it, but the problem exists when your 1099-B records a basis of 0. And they say that you don't have a basis in it, when in reality you have already paid taxes. And when you pay taxes on something, your basis gets raised to the fair market value of what you paid taxes on. So just be aware of your 1099-B. You'll want to double check the numbers, especially if you have it pulled directly from your brokerage account automatically. That could be an incorrect number on that 1099-B. So just ensure that you get the correct basis that aligns with what you've paid taxes on. And then when you hit continue, it takes you to this page, just again ensuring that you have the correct basis. So if you need to adjust your cost basis to ensure the best outcome, this is going to help with that. You'll notice at the bottom there, it talks about a supplemental form. This is where you're going to be making that adjustment to align the basis with what the actual basis is, thereby avoiding double taxation. This is why I highly recommend working with a professional, because it gets really complex. I'm just a random guy on YouTube, so please don't take this as investment, legal, or tax advice. Fortunately, it might not be too late for you to actually lower your tax bill this year. So let's go ahead and click on personal and then deductions and credits. Select I'll choose what I work on. And then we're gonna scroll down to retirement. And then there's a traditional or Roth IRA. Let's go ahead and click start. So with a traditional IRA, you can actually contribute regardless of your income. The problem is that if you make too much, you can't deduct that contribution. So if you think you earn too much, just know you can always contribute, but you just can't always deduct it. So let's see if that's a possibility for you or not by clicking on traditional IRA for both you and your spouse if you're filing jointly, or if you're filing single just under your own name. Now you'll note on this page that it says answer yes if you plan to make a regular contribution by April 15th of this current tax year. So it's not too late to make a contribution and reduce your tax liability, assuming that you're able to deduct that contribution. Go ahead and click yes. This typically isn't the case, so I'll select no. So this is where it asks us how much we actually contributed, and this is where we're going to play with the numbers and see if there's a benefit, and if so, how much of a benefit we can get by contributing. Obviously, we want to stay within the annual contribution limits, but feel free to play with the numbers. Let's take a look at the second way that we could potentially reduce our tax liability this year by going back to personal and deductions and credits. Select I'll choose what I work on. Then we're going to scroll down to medical. Under medical, it says HSA. That's where we're going to click update. And if you have an HSA that you were able to contribute to for the previous tax year that you're filing for, you may be able to make a contribution here and actually deduct that contribution. Let's go ahead and say that both of these individuals had access to a health savings account. Click continue. We're going to assume that they didn't use their HSA to pay for medical expenses. By selecting no, hit continue. In this example, they didn't inherit the IRA. And did Olga put money into the HSA this year? Let's go ahead and select yes. And this is where, again, we're going to play with the numbers based on how much we actually have to contribute to an HSA. And if we want to do that, then we can see how much of a tax benefit it's actually going to provide us.